Friends, so this is the second video in the technical analysis video series. Srinivas here. So let's continue where we left off. We had mentioned that this sidebar has a lot of tools that you can use. We need to talk about what is uptrend, downtrend, flat trend, reversal, etc. For that, let's. I've chosen a particular date between two dates of Nifty. So I'm going to just place my mouse cursor here and hit Alt V to draw vertical line. Again, another mouse cursor here and hit another Alt V for vertical line. Then this is probably somewhere here. I can hit an Alt H for an horizontal line. So as you can see, if I draw another vertical line using Alt V here, from between these two vertical lines, you can see that the primary trend is uptrend. Okay, so if I hit Alt T to draw trend line, I can draw something like this, and you'll see that on an average the prices have moved up. Similarly, from between these two vertical lines, the trend is on an average the primary trend is down. So again, hitting Alt T, I'm going to draw another line, and since this is a downtrend, I'm going to just set the color to red, right, to show that it's a downtrend. So definitely the primary trend is an uptrend, and definitely the primary trend between these two vertical lines is a downtrend, right? So basically, but if you look at the secondary trend, there is a lot of ups and downs, right? So that's how the stock market works, like we discussed before. So if I try to draw that, so if I try to take the part tool here and I try to connect some significant points. So this is a low point, this is a high point, again this is a low point, high point, low point, high point, again a low point, high point, low point, and a high point. Okay. So if you once you're done drawing your path, you can hit escape to get that path basically. So you can see that in the primary trend, which is an uptrend, the secondary trend has ups and downs, and even inside the secondary trend, if you go into hourly chart, so right now we are looking at the day chart. If you look at the hourly chart, there'll be still more waves there. It's called ripples. Okay, so basically what we are trying to point out is in the secondary trend, there'll be some points at which the price is increasing and increasing. Okay, so at this point it was high, then it became low. Again, this point was high, but with respect to the previous high, it was higher, right? And this point with respect to previous high, it was higher. Similarly, this point with respect to the previous high was higher. And if you look at the low points, this was a low price here, but this was also a low price. But comparatively to the previous, if you look at my mouse cursor, comparatively to the previous point, it was higher than the previous low. Okay, and same here. This was a low point in the secondary trend, but it is higher than its previous low, and so on and so forth. Okay, so we can use this text and draw, let me mark these points by ellipses first. So I'll go here, I just take this ellipse and I'll mark these points. Drawing an ellipse is easy. So you just, take the ellipse, mark 2 points and just move the mouse and ellipse will be formed. So this is 1 point. And I'll draw a few more ellipses to indicate the low points, right? So let me take an ellipse and indicate the low point. And let me also change the color to red to show that it is low, right? So again, draw the ellipse. Draw it here. These are all the high points. The purple ellipses and the red ellipses are low points. Okay, so you can use the text and mark this as a high point. So you can take a text and you can mark it as, you can call it local high, right? Okay, and you can move the text, just drag the text around and place it wherever you want. Then holding the control button, you can just drag the text. It will duplicate it and move it automatically. And you can double click it. You can call this a local low. Okay. Now, if you take this ellipse, it is a high point, but with respect to the previous high, it has increased. It's more than the previous high. Okay. So this point is what is known as the higher high. So again, I'll hold Control key. I will drag this. It will duplicate and drag it for me. I will double click it. Right. I'll make it higher high. Okay. Or what is known as HH. Okay. Similarly, this point is a point where the stock price was more than this point. It is a local high, but it is a higher high because it comparative to the previous high, it is higher. So this is also higher high. So again, I will just control drag this and I will double click it. Okay, and I'll make it HH. Okay, so what we are saying is this point is a local high, which is more than the previous local high. Low, we are calling it local because it's in the secondary trend. Okay, primary trend, the trend is bullish, but in the secondary trend there are waves, undulations, right? In those undulations, this is the local high, which is higher than its previous high. So this is higher high. Okay, and similarly, this another control drag. This also is higher high. Okay, now this is a point which is low, right? So let me see how I got this here. Just okay, this text is not needed. This is low, and this point is also a low in the secondary trend, but it is higher than the previous low. Okay, so this we can call it as a higher low basically. Okay, or it is called as HL in the short form in the trading lingo. Okay, and again this point is higher than its previous point. It is one of the low points, but it is higher than the previous point. Okay, so again you can control drag this. You can double click it. You can make it HL. Okay, and the same for this point also. So again, control drag this text and put it here. So you can see all the higher highs and the lower lows. Okay, so this is in the bullish part of it. What about the downtrend? What about the bearish part? Okay, so some of you might find it confusing. See, where do I draw this when I'm drawing using this chart, this path chart? Where do I stop? Where do I which low point do I need to stop? Which high point do I need to catch and all that? So you might be a little bit confused. So for that, I will show you a easy trick here. So basically, let me remove all the drawings for now, so that it is a clean thing again. Let me do Alt V to get my vertical lines back. Yeah. So we get our vertical lines back. Alt H to get the horizontal line back. Okay, and now let us introduce you to indicators. See, indicators are mathematical functions which are calculated based on the chart prices, based on the stock price. So one indicator, when I click the indicator, I can search for EMA. Is called moving average exponential. Okay, so what does this indicator do? This indicator says, give me the average price of the stock for last 9 days, and depending on the closeness of my stock. For example, if I'm computing the EMA on this date, so I'll take the past 9 days stock price and I'll average it out. Okay, once I average it out, I will make sure that the days which are just before this day, for example, let's take 9th March 2015, for example. So the stock price on the 8th March will be given higher precedence. On the 7th March will be given a little lower precedence than the 8th March, and the stock price of the 6th March will be given even lower precedence. 5th March even lower precedence, right? Or lower weight. Instead of precedence, we can say weight, lower weight. So we take the 9-day average, but the weight is attached to the each of the stock price, such that the closer it is to the current day, the higher weight it is. So that is called exponential moving average. Okay. Now, if I go to the settings here and I make this exponential moving average to be, let's say, we have to try this out. Maybe let's try 10 days and see what happens. Okay, so I am trying to basically get to a point. You have to experiment with this. Again, as I said, technical analysis is experimental. It's not a perfect science. So if I take for 12 days, let's see how it looks like. Okay, that might be a little bit better. Maybe I can go 14 days. Okay, so basically I'm experimenting looking at this blue curve to very easily tell you how to mark higher highs and higher lows. Okay, so I think this is good enough. So if you look at this blue curve, now you can really easily mark the higher highs and higher lows, right? You take the path and you go along your average, your indicator, which is the EMA, which is exponential moving average. You go from here, then this point is higher high. Okay, again it becomes low, it becomes high, becomes low, becomes high, right? I'm following the moving average, but I'm taking the stock price as the see this in this bottom portion I'm going in the middle, right? And again in the top portion I'm going like this, right? So this makes it easier for you to draw the pattern like. Okay, similarly, let me draw a pattern for the part where the trend is bearish, or Alt T. This is a downtrend here. Okay, so I put it in red, so it's the downtrend. Again, using this and using the average exponential moving average, I can draw it like this. So here. Notice I'm following the exponential moving average, but I'm catching the highs and lows of the actual stock price. Okay, I'm following the exponential moving average, but catching the highs and lows of the actual stock price. Yeah. Okay, so that should suffice for our thing. And again, this chart I'm going to go to the settings and make it right because it's downtrend. So you can see that. Okay, so once the stock price hits a high, okay, a reversal has happened here. A reversal means from an uptrend it has gone to the downtrend. So again, we can mark that point where the reversal has happened, and here we see this is the point of reversal. Okay, so just to make it non-confusing, you can come to the stock which you have selected. In this case, it's our Nifty. You can click on the I button to hide it. So you can see that you see only the exponential moving average indicator and the line you have drawn. So even if you want to hide the exponential moving average indicator, you can do that, and therefore you'll see the lines, the trend lines, the trend pattern that what you have drawn manually very clearly. Okay, so again, like we discussed about the higher highs and lower lows. See, this point is a high, right? But after reversal has happened, this has formed at a stock price value which is lower than the point of reversal, right? So this point is what is known as lower high. Okay, so let me put a text here. I'll call it LH, short term for lower high. Okay, and this is also lower high. If you see that this is also lower high. This is not lower high because this after forming a lower high, the lower high value has been taken out. So this is a local high. Again, this point is a lower high because compared to its previous high value, it is lower. So this is a lower high. Okay, so this point is not lower high because the high point, local high point, increased and it went beyond the local high. So its previous lower high. So this is not a lower high. Okay, this is a lower high, and again this is a lower high again, and maybe this is the same, almost at the same level. So this is a similar high. Okay, it's not a lower high, and this point is the low point, but it is lesser than the previous low point. So this can be called as the lower low. Okay. I'll make it as LL because that's the short indication for lower low. And same thing, control drag it to here. This is also lower low. Same thing here, lower low. But you see, this point is not lower low, right? Because this point was more than its previous low. So this is not significant for us. This is the same low, right? Because it's not lower low because it's almost on the same price level, almost, right? Approximately. But this point is definitely a lower low. Right, so you can see how the primary trend is, how the secondary trend is, and what are the higher highs of the secondary trend, what are the higher lows of the bullish secondary trend, and in the bearish trend, what are the lower highs and what are the lower lows. So all this is good for understanding basically. So this is what we wanted to talk about. So let me bring the chart back. So I just go here and I show this chart. You have the chart back, and EMA also you can bring it back, right? You'll get this chart, and for now you can delete the lines. So I have 16 drawings and one indicator. Let me keep the indicator. Just let me remove the drawings. Okay. So this is your chart again with just a moving average. So let's move on to the next point. The next point we wanted to discuss was this. The time travel tool now. Okay, so basically, as you know, that the stock market analysis is all about studying the patterns in the past and applying those lessons learned in the present and in the future, isn't it? So basically, whenever you are studying the pattern in the past, you have to pretend that you are actually in the past, which means, let's say that you are trying to study the chart at this date. Let's say this is 30th June. I'll just put an article. This is 30th June 2014. Okay, now what you should do is, first of all, you should use this replay tool, also called as the time travel tool. Okay, and you should first use this blue button where you can see there are two candles and there is a back arrow, if you can see, right? Once you press that, you'll get this blue line, and once you bring it onto the date of interest and click it, all the stock prices after this date will be hidden. Okay, this is fundamentally the requirement to study the stocks and chart patterns from the past. This has to be the first step, because assume that somehow you're time traveled back and you're now on 30th June 2014, right? None of this information is visible to you, right? So if I close this tool, right, I'll just you're in chart replay mode, you want to exit this mode, I'll say yes. And see, if we come to today is 15th July 2022. Do I see any information about coming Monday, that is the 18th July, or 19th July, which is the coming Tuesday? No, because it has never happened, right? So when I'm analyzing the stock at 30th June 2014, any of these candles have not happened. So we should not try to do stock analysis based on those. We should try to say that, assuming that I'm in 30th June 2014, assuming that I have time traveled, what is the stock analysis, what is the pattern analysis I can do? So again, I click the replay tool. This button is selected. You can see the blue highlight on this button, and I get the blue vertical line, and I go to my date of interest, and so the chart is now as though I am actually in 30th June 2014. Okay, so now you can use this button to go one step at a time. It will give you the candle which was formed on 30th June. You can just play and it will give you all the candles one after the other. Okay, but this tool will help you to do chart analysis and pattern analysis, candle patterns, chart patterns in the past, and this is the first step you have to take for any technical analysis of the past trades. Okay, so now I will just play it and show it to you. You can see that it will show you how the stock prices evolved, right? So you can decrease the speed if you want, right? Or you can increase the speed to max, right? Okay, it's almost done. No, actually we're in 2016. Let me try to, okay, the speed is max. Okay, just let me close the tool. Okay, so basically we are back to the complete chart now. Okay, now we should also talk about this DWM levels. See this, you can see my mouse cursor. If I place it here, I can change it to a day. This is already the day chart. I can change it to a week chart. Okay, weekly how it looks. So each candle represents not a day now. It represents a week. Okay, it represents a week. So this week, the week of 4th July, and this week, the week of 11th July, right? You can see that, right? So basically now each candle does not represent what has happened in a day. It represents what has happened in a week. Okay, and you can even go to monthly chart. So this is July 22, this is June 22, before that is May 22, 2022, and April 2022, and so on and so forth. So this is the monthly chart. Okay, so one thing to notice is, see, if I go to daily chart, okay, let me go to daily chart, and let me put a vertical line on today's date, that is 15th July 2022. I'll put a vertical line. Let me go 5 days back, and I will just go to the settings, and I'll make this color orange or something just to distinguish it. Okay, so for us, for in the daily time frame, we are able to see all these ups and downs, right? On Monday the price closed above the opening price, and therefore we got a green candle here. The next 3 days we got 3 red candles, and today's candle almost the market is going to close in another 10 minutes. It's almost green, so that's a good news, right? But if I take these two lines, I have 5 days here, 1, 2, 3, 4, and 5. If I go to weekly, see what happens. Okay, so weekly my two lines have become only one line. Why? Because all my candles for this week between those two lines are inside this candle only. Okay, so what I am trying to say is, some chart patterns, if you see in the daily time frame, those chart patterns will be collapsed in the weekly time frame, and same for monthly. So if I put another line, let us say, so one was black, one is orange, and I'm making this one yellow. Okay, so if I go to the monthly chart now, see what happens. Right, in the monthly chart I see only the yellow line. Why? Because the weeks which we were talking about is in the same month, right? So as and when you go to the upper time frames, all your chart patterns get collapsed. Okay, but another thing is, see, if the trend is in the higher time frame, it is much more stronger than the lower time frame. I'll tell you why. Because see, if you look at the higher time frame, which is the monthly time frame, and if you see that the behavior of the stock price has been bullish trend, that is increasing trend, that means more than telling that it was bullish during a day. Okay, because see, today, this week or something, it might be bullish. Before a few days, it might be bearish. Then again, there might be a wave pattern in the day frame, right? Just because it is bullish today might not necessarily mean it is bullish tomorrow also, okay, because this is a shorter time frame. But if you say that it has been bullish for the last few months, then definitely you can say that, okay, the stock price is going to hang around somewhere here. There is no way that the stock price is going to jump and come to a price somewhere down here, right? So that is the moral of the story. Any trend that you see in a higher time frame is much more stronger and much more given much more weight than a trend that you watch in the smaller time frame. Okay, so the smaller time frame, you need to look for reversals and take your trade, and you need to depend on a larger time frames to see how the trend is like. So that is the moral of the story. Infosys Limited stock NSE. Okay, and let me go to our indicators. Let me go to and search for volume. So just volume, right? Nothing else. So I went to this indicator button. I clicked it. I searched for volume. I got this volume. I just clicked on it. And let me come here. Right click. I will go to the settings of the volume. And in the style, I will say that show me the moving average of the volume also. Okay. So you can see that this candle, which is a small green candle, has a large volume associated with it. Okay. This means that there was a lot of trade. Bulls try to push it up. Bears try to bring it down. All that happened. At the end, the bulls started winning because the price closed higher than what it had opened in giving a green candle. And at the same time, there was a lot of transaction happening on this share at this price levels. Okay, so that speaks a lot. Okay, whereas if you look at some other volume somewhere, there was a bearish win here, but not very convincing win, and the volume was very low. Okay, so the point I'm trying to make is the volume speaks a lot. So even in this green candle, the price is also good, the volume is also good. So you get a double confirmation that there may be a bullish happening going on there, because volumes are also large, and the price jump from the open to the close is also large. So the body of the candle is also big, volume is also big, giving us a double confirmation that it's going to go, right? So that is the kind of things we have to look out for, and we wanted to talk about the volume. So let's look at the next point: supports and resistances. Okay, so again, listing down what we need to talk about in support resistance. We need to talk about what is support, what is resistance, obviously, because that becomes very important when deciding whether what should be your stop loss, etc. And we should talk about breakout in the up direction and breakout in the down direction, and sometimes called breakdown. Okay, and we must also talk about once you have a particular value as resistance, can it become a support? We have to talk about retest and bounce. We have to talk about Fibonacci retrace. We have to talk about pivot points. We have to talk about Bollinger Bands. So all this we have to talk about. So before getting ahead of ourselves further, let's talk about support and resistance. Okay. Now what I will do is, in indicator, I'm going to draw the exponential moving average that you have already seen. But with this, what I'm going to do is I'm going to go to the settings, and I'm going to say, show me the exponential moving average for each day using past 100 days as the calculation. So it will take the past 100 days of the prices. It will sort of average it with respect to the closeness of that price, and then it will give you the graph. Okay, you can see something cool happening here, right? So if you can see that this blue line, which is the 100-day exponential moving average, the stock price came and hit it, then again it went up, it tried to hit it, then again it went up, hit it, again it came down, again it sort of hit it, again came down, and at this point it really forced itself below the blue line, and it stayed there, and then again it went up, and so on and so forth. Okay, so in trading lingo, what this is known as is the support. Okay, so think that you are bouncing a metal ball on a wooden floor. Okay, and there is gravity. Okay, so what will happen if you just leave the metal ball and it falls down on the floor? It will hit the wooden floor, it will bounce back, hit the wooden floor, again bounce back, and so on and so forth. But sometimes what happens, if you throw the ball at the wooden floor, the metal ball is going so fast that it will break the wooden floor and go down also. And similarly, this is for the support. Okay, now resistance is actually the exact opposite. Okay, so again, assume a metal ball and a wooden ceiling this time. Okay, not a wooden floor, but a wooden ceiling. So what is happening if you just draw a trend line here? Let me draw a trend line. Okay, so if you connect most of the local highs here, now let us see what has happened. Okay, and we'll make this also blue color, because something like a sky blue color, so to show that it's a resistance. So what has happened here? You have taken the metal ball and you have thrown it up to the ceiling. Okay, so here you can think of it as the ball has come down. Okay, ball has bounced back, again you threw it at the wooden ceiling, and you threw it so fast that it has done a breakout here. Okay, it has made a hole into the wooden ceiling, and it has gone up. So this is called what is known as a breakout, or breakout in the positive direction. And also after going up, again it has broken the ceiling again in the downward direction, and it has done a breakout in the down direction, or breakdown, if you want to call it that. And so this is the concept of support and resistance. Whenever the stock price is going and hitting a ceiling again and again and coming back, or it is trying to break out of that ceiling, or it breaks out, stays there for some time and again breaks down. Okay, so if you look at let me draw an arrow to show it to you. So this is the breakout point because it broke out of this resistance. And again, I'll draw another arrow. This is the breakdown point or breakout in the negative direction, right? Here's where it is hitting the support many times, right? So you can see that it is taking the support of this blue graph, which is nothing but the exponential moving average of 100 days, right? So there are it is taking support here, and you see how many times there has been a break, a breakdown and break up. How many times it has happened? Okay, so you can draw support and resistances yourself. You can either use the moving average to create a support and resistance, or you can connect the local highs, and you can. So if I hit Alt T again, and I can connect all the local highs here. Let me hit Alt T, connect all the local highs here, right? So this could be like a resistance line that I myself have drawn. Okay, and you can also connect all the local lows approximately, right? Again, I'll hit Alt T. I'll connect all the local lows, right? Can't connect all of them. I'll have to get as many as possible here, right? So maybe you can see I got many of the low points there, and let me make this color green so that, or blue or dark blue, to say that it's a support. So you can see that the stock is bouncing like a ball between the wooden ceiling and the wooden floor. Up, then hit the ceiling, down, then again up, hit the floor, again up, hit the ceiling, down, again up, hit the ceiling, down, hit the floor, bounce, and so on and so forth. Okay, so this is the concept of support and resistances. There might, when you analyze chart patterns, there might be levels of stock price that might be giving resistance to the stock price, or it might be giving support to the stock price. For example, if I do an Alt H here, you see how much support this level has given to this stock. And whenever the hit and reversal happens, it's called retesting, right? So this support is getting retested, and once retest has been done, it has bounced. Okay, so when it does not come back for a long time, it's called a bounce, right? It has bounced, and again after this was when this was on let me hit Alt V, 28th July 21, and in 7th March 22. Okay, so that is almost 1.5 years. After 1.5 years, this support is still existing, right? So the stock price came back, and it was still sort of took a retest against the support. And after March 22, again there was a breakdown of the support in 16th June 22, right? So you can see that these sort of support price levels help you see where the stock might bounce back, right? It might predict that it might take the support, and it might sort of do a retest, or it might bounce, it might come back, right? Similarly for the resistance. Okay, so if you take this as the resistance, Alt H again. So you see how many times this resistance has been retested. So it went here, it tried to break out, it did break out a little bit, but no, not enough strength, it came back, and again it tried to break, no, again it broke. So this could be a good ceiling to say that, okay, stock price is getting a lot of resistance from this resistance level, and in case this stock price does really break out of this resistance level with a good large green candle with good volume, then definitely the stock might go up. So some predictions can be done like that. So these support and resistance levels are one of the indicators, clues, tools for predicting how the stock prices might move.